Welcome to Talk Tickers, your shortcut to understanding the critical insights from earnings calls.
Yeah, and today we're diving deep into the Element Solutions, Inc. first quarter 2025 earnings call.
Exactly. Our mission, as always, is to pull out what really matters for experienced investors like you. So let's get straight into it.
Okay, so Element Solutions, they put up a pretty solid first quarter. Organic sales were up 5% compared to last year.
Okay, decent growth.
Yeah, and the real standout was their electronics segment. That saw impressive organic growth of 10%.
10% in electronics, that's quite strong.
Definitely. And their adjusted EBITDA, which is, a key profitability measure that hit $128 million, actually beat their own expectations.
Better than expected, always good to hear.
Right. And we also saw some really significant traction in specific areas. Like wafer level packaging, their sales there grew by over 20%.
Wow, over 20% in wafer level packaging. We'll need to dig into that.
For sure. And just rounding out the high level numbers, their financial footing looks solid. Their net leverage ratio, basically debt versus earnings,
Right.
is at a historic low, 2.1 times.
Lowest ever, you said.
Lowest ever, yeah. Looking ahead, Q2 guidance for adjusted EBITDA is between $120 million and $125 million.
Okay.
And for the full year, they're sticking with their original guidance range of $520 million to $540 million.
Yeah, got it. So holding steady on the full year outlook, despite, everything going on.
Seems that way, yeah.
Okay, let's really unpack that electronics segment then. 10% organic growth is great, but where did it actually come from? Was it just one thing?
No, and that's what's interesting. It was pretty widespread. Their circuitry business, semiconductors, assembly materials,
Yeah.
they all contributed positively within electronics.
So broad-based strength.
Exactly. But like I mentioned, a real engine there was that wafer level packaging, over 20% growth.
And that huge jump in wafer level packaging, what's driving that specifically?
Yeah, there's a clear reason. It's directly linked to the just soaring demand for high bandwidth memory applications.
HBM, right, for AI.
Exactly. Think about AI, advanced data centers.
Yeah.
All those technologies need this kind of cutting edge packaging. So Element Solutions is right in the thick of that major tech trend.
Tapping right into that AI boom makes sense. Now, even within electronics, I think you mentioned some headwinds, something about an EV OEM.
Yeah, that's right. They did see some weakness from a major domestic electric vehicle maker. But interestingly, their power electronics segment still managed good growth overall.
So how'd they pull that off?
Well, it really highlights their strategy of winning new customers. They're diversifying, not putting all their eggs in one basket in the EV space.
Smart move. It sounds like there's been a conscious effort to really elevate their position in electronics materials generally.
Absolutely. Management talked quite a bit about a strategic transformation, basically unifying their different electronics units to be a more cohesive leader.
Offering more complete solutions.
Yeah, exactly. More integrated system-level solutions. And that also helps them build a stronger pipeline for future innovation.
Okay, makes sense. Now, let's shift gears a bit. The other side, industrial and specialty. That saw a bit of a dip, right?
It did, yeah. Organic sales there were down 2%.
What's the story there? Where was the weakness?
The pressure was mainly concentrated in Europe.
Yeah.
Which, kind of reflects some of the broader macro challenges we're seeing in that region.
Okay, Europe dragging it down. But was it all bad news for that segment? Profitability?
Actually, no. While the top line was down, they did manage to keep profitability relatively stable in industrial and specialty.
How?
A couple of things helped. More favorable raw material costs, deflation there, and just good discipline on pricing and managing their overall costs.
So cost control helped cushion the blow.
Right. And they also mentioned they expect some delayed offshore projects, which hit volumes earlier, to kind of come back online in the second half of the year. So that could provide a bit of a lift later on.
Okay, something to watch for in H2. Now, thinking bigger picture. All the talk about global economic uncertainty, potential tariffs. How's Element Solutions thinking about that? Are they worried?
They're definitely aware of it. They acknowledge the uncertain macro backdrop and the potential impacts from trade actions. But honestly, they express quite a bit of confidence in being able to handle most direct tariff impacts.
Okay, confidence is good, but what's behind that? What's their strategy to, weather that potential storm?
A big piece is their global footprint. They have localized operations, sourcing, manufacturing, technical support in different regions.
So they're not overly reliant on, say, China-US trade lanes.
Exactly. It helps them stay close to customers, reduces those cross-border issues. Plus, another point they made is that while their products are critical for performance, they often represent a pretty small slice of the total cost of the high-value goods they go into.
So even if tariffs hit their inputs, the impact on the final product price might be manageable for their customers.
That seems to be the thinking. Yeah, gives them some flexibility. And they're not standing still either. They mentioned ongoing work to localize supply chains even further, and they're constantly talking with suppliers and customers about managing costs.
And their guidance assumes?
Right now, their guidance assumes no, like major demand destruction from tariffs. And they said their trading in April was solid, which supports that view for now.
Okay, so cautious optimism backed by localization and customer relationships. Let's talk financials again. That low leverage ratio you mentioned, that must give them some firepower, right?
Absolutely. Lowest net leverage ever. That means they have significant capacity to deploy capital. Management was pretty explicit, saying they see potential for attractive opportunities in the current market.
Meaning M&A or buybacks?
Could be either or both. Things that enhance long-term shareholder value. They definitely sound like they're ready to act if the right opportunity comes along.
And what about cash flow in the quarter? How did that look?
They generated $30 million in adjusted free cash flow in Q1. Now, it's worth remembering, Q1 is usually their lowest quarter for cash flow. Just seasonal factors, working capital swings, that kind of thing.
Okay, so $30 million, but seasonally weak. And investment plans, CapEx.
Their capital expenditure plans for the full year are still around $65 million. And that money is earmarked for supporting those key strategic growth initiatives we've been talking about.
Right. So let's focus on those growth drivers then. Where are they really placing their bets for the future? What should we be watching?
Several key areas. One they highlighted is data centers.
Yeah.
Their exposure there is getting pretty substantial, approaching $200 million this year, they said.
Wow, $200 million in data centers. How does that break down?
It's across different parts of their business. Circuitry materials, assembly solutions, even stuff for memory disks. So multiple angles into that data center build out.
Okay.
Definitely keep an eye on wafer level packaging. They expect new product launches there later in 2025, which could add more fuel to that fire.
More growth on top of the 20% plus they just saw.
Potentially, yeah. Then there's Argomax. That's their sintered silver tech for EVs. They're seeing good progress expanding the customer base for that, especially in Asia and Europe.
So diversifying geographically with that EV tech too.
Seems so. And another one is Cuprion. That's their active copper technology. They mentioned strong customer engagement, and they sound pretty confident about its potential.
Lots of irons in the fire on the tech side. What about supporting all this growth manufacturing?
Yeah, they're actively working on increasing manufacturing capacity for those high growth spots, like nanocopper and power electronics. At the same time, they're streamlining some older legacy manufacturing and building up R&D capabilities in key geographies.
Sounds like a balancing act, investing in the new while optimizing the old. And operationally, how are they managing costs through all this?
They stress their OpEx structure is highly variable.
Meaning they can adjust spending quickly.
Exactly. It gives them agility to respond if demand shifts up or down, helps them manage costs effectively.
Okay, that makes sense. So pulling it all together for our listeners, those experienced investors tuning in, what are the really crucial takeaways from this call?
Well, first, that really strong performance in electronics, especially the parts linked to AI, advanced packaging, data centers, it clearly signals they're aligned with some major long-term tech growth trends. That's a big plus.
Right, riding those big waves.
Second, the fact that industrial and specialty held up okay on profitability despite the European weakness shows the benefit of having a diversified business. It adds resilience.
Diversification paying off.
Third, their whole approach to tariffs being proactive, localizing, plus having that super strong balance sheet. It puts them in a pretty good position, relatively speaking, to navigate economic uncertainty and maybe even capitalize on opportunities like M&A if others struggle.
Financial strength gives options.
Definitely. And finally, that continued investment in R&D, the new product pipeline. It shows they're focused on staying ahead technologically and driving future growth, not just managing the present.
And that data center exposure provides a concrete example of them moving into these bigger B2B growth markets, right? Less reliance on consumer cycles, perhaps.
Exactly. It's a tangible shift towards potentially more stable, high-growth industrial tech markets.
Okay, fascinating stuff. Now let's put on our thinking caps for our This Is Not Financial Advice segment. Based purely on what we heard in the call, what's an outrageous but plausible trade idea that springs to mind?
All right, here's one. Given how much they emphasized the growth in wafer-level packaging and specifically called out high bandwidth memory demand as the driver.
Yeah, the HBM link was very clear.
Right. So an outrageous idea could be to go long on key companies that actually make HBM, the direct manufacturers. Now, that's a concentrated bet on one part of the memory market.
Okay, so how do you make it plausible or at least balance it?
Well, to potentially hedge that or play a shift within memory, you could pair that long HBM position with a short position in companies that are heavily reliant on traditional memory, like standard DRAM or NAND flash.
So betting that HBM demand driven by AI might outpace or even take share from older memory types.
Kind of. It's a way to play the specific trend Element Solutions is benefiting from, while acknowledging that the broader memory market might see shifts or maybe slower growth in the traditional segments. Leverages their insight, adds a hedge.
Interesting pair trade idea. Definitely fits the outrageous but plausible mold. Okay, second idea. Still not financial advice, of course.
Okay, second one ties into their talk about localization and tariffs. Element Solutions highlighted how their global, localized footprint helps them mitigate tariff risks, right? And they hinted that maybe some competitors aren't as well positioned.
Yeah, they sounded pretty confident in their setup.
So the trade idea is this. Go long on companies that are actively and demonstrably moving their supply chains out of, say, a heavy reliance on China. Companies building hubs in places like Southeast Asia, Mexico, regions benefiting from that trade redirection.
The friend-shoring or near-shoring plays.
Exactly. Pair that with a short position against companies that still have really significant direct exposure to U.S.-China trade friction, companies that maybe haven't diversified their manufacturing or sourcing much and look vulnerable.
So betting on the supply chain shifts, rewarding the adapters, and potentially profiting from the struggles of the less agile.
Precisely. It's playing that theme of localization and resilience that Element Solutions themselves brought up as one of their strengths. Again, outrageous, plausible, definitely not advice.
Got it. Two thought-provoking ideas there. Listeners, as always, do your own research. These are just conceptual scenarios based on the call.
So summing up Element Solutions Q1, I'd say it was a strong quarter overall, real strength in those critical electronics growth areas, and pretty proactive management dealing with a complex environment.
Yeah, that focus on AI, data centers, EVs, combined with the healthy balance sheet, it seems to position them pretty well.
It does. Challenges remain, no doubt. Industrial markets, especially Europe, are still a bit soft, and the tariff situation is always a bit of a wild card. But they seem well equipped to navigate it.
So, final thoughts. What's one key question or uncertainty that lingers for you after this deep dive? Something investors should maybe keep mulling over?
For me, it comes back to that localization strategy. Just how much of a durable competitive advantage is it really? As global trade policies continue to shift and evolve, how effectively can their diversified footprint truly insulate them compared to competitors over the long haul? Is it a temporary edge or something more fundamental? That's what I'd be watching.
A very pertinent question indeed. How sustainable is that moat? Thank you for joining us for this deep dive into the Element Solutions earnings call.
We hope this analysis gave you some valuable insights to think about.
We'd love to hear what you think. Is Element Solutions' push into data centers compelling? Do you buy into their localization strategy as a key advantage? Let us know your perspectives.
And be sure to tune in next time for another critical earnings call breakdown right here on Talk Tickers.